Well, let's get into them first then. So Anheuser Busch Inbev, world's largest brewing company. We know the brands Budweiser, Corona, Castle, of course, because of SABMiller. Market capitalization, the largest of the lot, $187.4 billion. That's the value of the company if you take the places where it's listed and you sort of add it up. Of course, it's listed here, it's listed in Brazil, it's listed in Belgium, and it's listed in the United States of America. The price to earnings ratio, it says there 166.5. That's probably a post-deal effect related to earnings and comparables. But the dividend yield sounds more realistic, 3.62. Let's put up the share chart while Chris tells us what he thinks. This is a 5-year chart. You can see that that's the deal point. That wobble there at the end is the realization that they are in fact going ahead with the deal, which of course was massive and involved a lot of debt.
One of the biggest corporate deals in history, and certainly the biggest in drinks history, in the drinks sector history, should I say. I think that downwards blip, Paul, really caused by a lot of analysts out there not believing that Anheuser Busch could extract the kind of synergies that they said they could. And in fact, if you look at it, they're actually ahead of the curve.
Really?
Oh yes. No, they're doing it. I mean, these guys are not known for their finesse when it comes to this sort of thing. They come and they just cut.
So they basically say, well, listen, you guys have got 100 people here, you only need 12. The rest of you are gone.
Yeah.
And everyone says, no, but the business will fall apart. But then they fire the 83 or whatever it is, and it turns out the business doesn't conk in. It just keeps going.
I mean, you see it. I mean, if you look at the people who own, or the people who direct AB InBev, 3G Capital in Brazil. And they were recently behind this whole Kraft-Heinz merger. And if you look at the costs of Kraft-Heinz, I mean, they're absolutely, there's no other food company comes remotely close to them. I mean, they're just cost cutters deluxe. I think with this one here, though, this is fascinating because SABMiller was already an incredibly lean and efficient business. Yeah. So their ability to do it, and as I say, they're ahead of the curve. I think $2.5 billion worth of synergies coming through this year alone.
And that's in addition to the business, because they paid like $100 billion for it, but then they were obliged to, in the process, offset some of that. So that was helpful because, of course, that then raises money. So they sold some of the Eastern European assets to Asahi, the Japanese, and then those were checks that they were able to use to pay down some of the debt.
So the net effect was much smaller. So, for example, I think $12 billion is what they sold the US interest for, you know, to Coors.
Yes.
So yes, at the end of the day, the actual deal value was significantly less than originally anticipated. So they are ahead of the curve. The concern, though, in the longer term with AB InBev is that they have never in their entire history managed to demonstrate that they are capable of sustained organic growth. It's all been predicated on acquisition.
And the core unit, the Brazilian business, where Carlos Brito and George Lemon and all those guys come from, is looking fairly soft because Brazil has had an economic crisis that has sort of run on for quite a few years. So sales of Brahma and Antarctica and some of their core brands back there have been a little bit disappointing.
You're right. And if you look at the main reason for buying SABMiller, which in my opinion has always been to get their hands on Africa.
Yep.
That was the final frontier.
And the reason there is because if you look at Africans' beer consumption of clear lager bottled beer, it's still relatively low.
And when it was growing rapidly, that's now come to a bit of a grinding halt with the huge decline in growth in Africa. 2 years ago,
which is the cause, which was caused by weakening commodity prices. A lot of these countries just looked very prosperous when underlying it was a little bit of a...
Look, as Bronwyn has pointed out on a number of occasions in other contexts, if you look at Africa, there's a very definite east-west divide these days. West Africa, oil-related in the main, taking a real hit. East Africa going much, much better. Now, interestingly enough, SABMiller's interests in Africa, along with those of Castel, which AB InBev now controls, well, not the Castel things, but there's a joint venture there. Yep. They're represented in 44 out of the 54 African countries, so they really cover the continent extremely well. But having said that, there's been a general downturn in African growth. I mean, the IMF and the World Bank are now looking for, what, 1.5% this year?
Yeah, which is
from 4, 5, 6% even a few years ago.
But it's a long-term game.
Yes,
so, you know, AB InBev will take heart from the fact that you just got to get your production systems in place, you've got to get your supply lines in place, and you just got to bide your time because the aspirational effects we spoke about just, you know, will work their way through the system in time.
Yeah.
Okay, so with that share chart looking like it took a little bit of a dive related to the deal conclusion, now starting to edge up slightly. I mean, how are you going to call it? Hot now? Hot later?
Yeah, I'm going to call it hot now, and I'm confident that we're going to see that move back up to where it was a year or so ago.
Yeah.
That's going to happen, I think, relatively quickly.
Because, of course, you can buy this one on the local market without needing to use any foreign allowance.
Yes.
And the share price has actually looked pretty weak. And so you could have, switched out of the one into the other. We got out of the stock prior to the, deal. And then, we were in AB InBevs for a while. And we sold those as well when we did the new hot stocks portfolio. But you're hot on it.
I'm hot, and I think the local one will be helped by the weak rand as well.
Okay.
So I'm definitely hot on this one.
Let's give it the thumbs up. Hot.